Well, let's get to one of our other big stories of the day, the big story of the day for the market, and that's the latest print on inflation. PCE inflation report out this morning, meeting the street's expectations, coming in line with the street's expectations. Here to break it all down, we want to bring in Michelle Schneider. She's marketgauge.com chief strategist. Mish, it's great to have you. Let's talk about the reaction that we're seeing play out to this inflation print. Yes, it was in line with what the street had been bracing themselves for. We're looking at gains here shortly after the open. How much of the inflation trend has already been priced into the market?
Well, that's a really good question, because in terms of whether or not we can argue that actually inflation bottomed back in October when we're now starting to see upticks in CPI, PPI, the fact that PCE came in line, does that mean now that whatever little blip we had rising in inflation is now over and it stays stayed is, certainly something that I would not necessarily get too comfortable with. Two reasons. Number one is because if we go back and look at the overlay charts, which I have shown over and over of the 70s and what's happened concurrently, is we saw all of the inflation numbers come down into 77, just like we've seen them come down from 22 to 24. And if the predictions are correct and we start to see any kind of loosening of monetary policy as we get towards June, was kind of exactly at the same time when we saw the trough in the CPI in the 70s, could be the trough that we're seeing right now in PCE CPI in the 2024, and we could start to see, with any loosening, the inflation numbers rise. So I'd say be happy now in terms of the inflation that it hasn't gotten out of control, but I wouldn't get too complacent still.
How does that lean further then into the higher for longer stance that the Fed may deploy?
Well, there's always two ways to look at things, and that's what's making the market so fascinating right now. And in terms of the Fed, if they kept things exactly the way they were and everything stayed exactly the way it was right now, like I almost think about a holiday photograph, when you look at the family and they're all looking very, very happy and it's that moment in time, that's kind of where the Fed is at right now. They haven't destroyed the economy like many people predicted, and they have possibly curbed inflation. So we could be at this perfect moment right here. So the higher for longer makes sense if we don't start to see more recessionary factors, which so far we've managed to avoid. However, what will happen if we actually start to see some kind of spike in inflation down the road? If Fed stays put, would that be enough? Because they wouldn't want to kill the economy, but at the same time, they don't probably want to raise rates unless they really start to see inflation get out of control. And that's why we're looking for specific signs why that might happen.
So we have inflation prints, we have the Fed driving the market action, and then you've also got earnings as we wind down this most recent earnings season here. On the fundamental side, Mish, what are you seeing there?
Well, in terms of the earnings, they obviously were better than what people thought. So this is exactly what we're talking about, right? That happy photograph. I'm pretty excited right now. I mean, besides the inflation conversation, I have my eyes on silver, I have my eyes on sugar, the normal ways you want to look at it, in the dollar. Dollar stays it, that's good. Sugar doesn't go flying, that's good. Silver doesn't start outperforming gold, that's all good. What I'm looking at right now is what I call my economic modern family, and I think the earnings are starting to show that some of those areas, like you just mentioned with Best Buy, but in the consumer area are strong. And the retail sector, especially measured by XRT, strong. IYT, transportation, strong. And of course, my granddaddy, which is the small caps, are trying very hard right now as we speak to get through the December highs at 205.50 if you're looking at IWM. So what that tells me right now is the market is trying to stretch beyond tech and into some kind of growth. And what would make it grow? Two things. I think one is the vanity trade that I love to talk about, which is really spurred by these diet drugs that, if they work, can spill over into people going out and feeling better about themselves, spending money. And the other is the potential reshoring that we're starting to hear more and more about, where production starts to come back to the United States. So there's three trends we have to watch here, right? On the spur of what we see earnings is, number one is obviously where inflation goes. Number two is how much the consumer stays happy. And number three is how much manufacturing and production can we bring back here and make our economy grow.
Modern Family, good TV show. Economic Modern Family, even better portfolio thesis. Michelle Snyder, thanks so much for taking the time. Great to speak with you as always. MarketGauge.com, Chief Strategist.
Thank you.
Thanks.